Hey, my name is James Nicholson and welcome to my YouTube channel. This is the Mortgage Roundup. This is a big week. I'm going to show you new rates for every category, and every category have dropped their interest rates in the last few weeks, which is really positive. Now, you'll have to have a look out as well, because some of them have also dropped their fees, because a lot of people in the comments, they say, you know what, the rates are moving in the right direction, but the fees are so expensive at the moment. Now, why is this happening? Well, the Bank of England dropped the base rate a few weeks ago. You'll have seen that. We went from 5.25% down to 5%. But this was already happening. Mortgage interest rates, the rates that you borrow at, that I borrow at, they've been reducing steadily over the last month. The reason for that is because business is slow. Lenders aren't lending as much. They want volume of transactions back up. And this happened in December of 2023. The market started slowing down considerably in December 2023. So the lenders wanted to kickstart the market. So in January, February, March of this year, they started cutting mortgage interest rates. That got the market busier again. Then they got greedy again. Then they were busier. They said, you know what, we're going to start putting rates back up. And so they started putting rates back up. And the market slowed down again. So everyone was then waiting for Bank of England to drop rates, mortgage rates to come down. And so lenders, they can borrow from bigger lenders. So the one you can see here is the Mortgage Works. Will borrow from JP Morgan and other big banks like that. They borrow on something called the SONIA swap rate. That dropped a little bit recently as well. So that meant that they've been able to cut rates. But even without big rate cuts to them, they've been cutting their margin just to try and get more percentage of the market. So in this video, I'm going to go through buy-to-let mortgages in a limited company name, in your personal name, your residential mortgage, HMO mortgages, and this will give you the best rates from the best lenders in the market, broker, or go on one of the comparison sites and just start the process of getting a better mortgage for you. Now, before we do jump into this, as always, I'd like to ask you very quickly to subscribe to the channel over there and hit that bell notification. We're on the way to 28,000 subscribers. And while you're here, if you could smash like, tickle like, do something to the like button, guys. That really helps me with the YouTube algorithm. And maybe share this video. Click the share button and send this to someone you know that could benefit. So, HMO mortgages is the first one that we're going to look at. And so maybe you don't even know what an HMO is. So I'll cover that quickly. So an HMO is a house of multiple occupancy. Think of student accommodation. Maybe you went to uni and you stayed in a shared house. And so these are properties that are popular at the moment with landlords, and they're popular with tenants at the moment. And so HMO mortgages, the Mortgage Works has the best rates out there. They've got a 5-year deal. They've cut this by about 0.25% this week, which is good. 5.49%, which is a decent rate. 3% fees. But this would be in a company you'd buy this, so you could offset those fees against costs anyway. Loan to value, 75%. The 2-year deal is now below 5% with these guys for HMO mortgages as well. We're at 4.94%. Again, quite a big decrease, around 0.25% since we last did this. So decent drops there. And we're looking at a 3% fee with a 75% loan to value. So if you want to do HMOs, go and check out the Mortgage Works. Now, limited company mortgages are for buy-to-lets. And this is how I recommend or suggest that you buy property if you want to going forward. Now, historically, most buy-to-let properties are in somebody's personal name, right? That's how it's been done for decades. But things have changed. It's less tax efficient to have it in your personal name now. You have to pay something called Section 24 tax, which is not great. So if you can, and if you're going to buy property going forward, I would always recommend that you buy it in a limited company. Again, the best lender on this is the Mortgage Works. If you haven't heard of them, they're actually nationwide. This is their buy-to-let division, if that makes sense. So they've got 2 great deals here. A 5-year deal is at 4.99%. This is decreased as well since a few weeks ago, which is great. The fees are 3%, which might seem high, but you're running it for a company, so you can offset that against tax. So it's not so bad. You should focus more on the rate. But obviously speak to an accountant as well. Check you're going to have enough costs in there to be able to get that back. Loan to value, they will lend you up to 75% of the value of the property. The 2-year deal has dropped to 4.84%. A great decrease there. Again, some of these are nearly 0.5% down on a few weeks ago, which is really good. Fees are 3% as well. Loan to value 75%, which is not bad at all. Now, limited company mortgages are always a little bit more expensive than getting a buy-to-let mortgage in your own name, and that's because there isn't tons of lenders. Nearly all the lenders do buy-to-let, but not all of them lend to limited company buy-to-lets. So there's less competition, hence the rates for now are a little higher. But I do think that they will come on parity with the normal buy-to-let at some point. Buy-to-let in your personal name. These are the headline rates that the mortgage works. Again, they've been really, really competitive in this particular niche. A 5-year deal is less than 4% now. I've done a video on this last week on this one. 5-year deal, 3.84%. I mean, to be honest, that isn't much worse than a lot of people had buy-to-let mortgages. I know the rates went down to 1% or less than that during the pandemic, but not everyone fixed at that, and lots of people paid more than that. So we're getting close to back to where we were. This is good. 3.84%. That is a cracking rate. Fees 3%. You need to take that into account, but obviously you'll have costs with a buy-to-let that maybe you can offset some of that. The 2-year deal is crazy good on this, and I don't personally believe that you'll get much better in the next 6 months on this. Maybe a little bit less in fees. 3.59%. That's a big decrease as well. 3% in fees. 75% loan to value. Mortgage Works is a good lender. I've got multiple mortgages with them. Never had a problem with them. Residential mortgages. So in this one, I want to talk about those people that have either a 25% deposit if you're buying new, or maybe you've got 25% equity, which is a lot of people, right? A lot of people. So their 5-year deal is very good. And so the 5-year deal is 4.03. Another big decrease. Barclays have got the best rate for both the 5 and the 2-year deal here. So it's 5-year deal is 4.03%, £899 in fees. They're moving down. They were £999 last time we looked. So this one has dropped fees. 75% loan to value. A lot of people could take this deal because a lot of people have equity. So this could be a good option. The 2-year deal is slightly more expensive. I'll note that. The 2-year deal is more expensive. That means they believe the 2-year deals or the rates are going to drop over 2 years. So they're trying to get you locked in for 5 years. That's what they're trying to do by this. So this shows Barclays at least believe that rates are going to come down in the next 2 years. The deal is 4.44%. That is down again as well. The fees are $899, 75% loan to value. Good to see a big high street lender with a really cracking rate here. NatWest, these deals here are for residential purchases or remortgages where you've got 10% deposit or 10% equity in the property. NatWest has cut their rates so many times over the last few weeks. The 5-year deal with just a 10% deposit, meaning you've got little risk, they've got a lot of the risk if the market shifts. 5-year deal is 4.68%. That's good. The fees are just $995, 90% loan to value, which is good. On the 2-year deal, there's a new lender. We haven't featured this lender. These guys have decided to get competitive and get some market share for themselves. It's the West Bromwich Building Society. They've got you a 2-year deal at 5.18%, which is a decrease. The fees are $999. Now, you can get cheaper deals than this. If you've got 40% deposit or more, then there are deals sub 4%. There are a lot of deals out there now, 5, 6, 7 deals out there that are sub 4%. I've done a video yesterday on where I feel the market and mortgage rates are going to go. So I really advise that you do subscribe. Go and find that video on my channel. Look at the old videos. It's just yesterday. You don't have to look too far, do you? And go and see where I feel interest rates are going to end up this year, 2024. I think there is going to be some movement. I do think it's down. How much? I'll tell you in that video. So do go and check that out. So great movement in this video. Lots of positive interest rate movement, which is really going to help a lot of people. There's still 30% of the market are on these ultra low interest rates that they got during the pandemic that are still due to expire. This will make it a lot easier for them when they come off those deals to get a better deal than they would have got a year ago for sure. So do comment below with any lenders that you think we should check out. That will help all of our community. Do like this video, guys. That helps me so much. Do subscribe, do share the video, and do check out all the other content on my channel, including this video right here.